Hi, good afternoon. You're watching Closing Trades right here on ET now, and it's pretty lackluster, as was the case even yesterday, up until when we had that late hour slip. So for now, we're just clinging around the 25,580 print for the Nifty futures. On the go today are chemicals, automobiles and cap goods, Hero MotoCorp, Apollo Hospitals, M&M, ONGC, Bajaj Auto. These are the names which are actually holding out. It's more lively when you think of it for the broader end of the market. While the market breadth is not really showing you any big of an up move, it's pretty lackluster there as well. But the individual movers and the kind of count and the gain that they're sitting on, that seems to be a lot better than what the large cap universe is doing. Look at a Bosch, for instance. That's scaling higher by nearly about 6% today. There's Blue Star, which is higher by about 5%. Oil India is going very strong with a 3.6% uptick. There's, of course, 361, which is higher by over 3% on the futures. And Voltas as well, which is scaling very smartly, about a good 3% in the green. Having said that, there are a handful of losers as well. So some of those PSU banks, for instance, are seeing some profit taking, especially PNB. That's down about almost 3% in trade. Interglobe Aviation, even though it's expected to be a nifty entrant come September end, but that stock is lackluster. It's down about almost 3%. Then Nykaa, of course, after that block deal, about a 4.5% downtick is what you're seeing on this particular counter. But Srishti, a lot of newsmakers.
Well, indeed, the top of the charts is indeed Nykaa. After that, 2.5% of equity change had in 3 block deals. And yes, it was, the report suggests that it was Banka family who is seen to offload its stake in Nykaa. And that stock has seen a fall of almost 4%, but no recovery from the day's lowest point is what we are spotting. The other stock in focus is, of course, within financials, PNB. After a week set of Q1 updates coming in, when the deposits grew just 11 or 12 odd percent, while the advances were actually down, and growth of just 10% is what we have seen, and that stock is also languishing in trade. But on the flip side is Motilal Oswal. That is one of the top gainers within the NSE 500 as well, wherein Motilal Oswal AMC has actually crossed an AUM of 1.5 lakh crores, and see the move on the stock. It's 6.5% jump is what we are spotting at this point in time. So Snehi, a lackluster day indeed for the benchmark indices, given that today is a weekly expiry as well, but nothing much to complain because select pockets are doing well.
But that's the thing, Shrishti. Only select pockets are doing well because you have so much of the market that has now slipped into the red. In fact, if you take a look at the mid-cap index also, that has now paired all its gains and is now absolutely at the flat line. You only have some scope of positivity that's being seen in the small cap end of the market right now. And well, a speck of green at best. Just a 0.2% uptick is what we're seeing in the nifty small cap space. Other than the gainers that Ayesha already spoke about, she spoke about Blue Star. You also have Voltas that's joining that party. So the entire basket of consumer durables, surprisingly, is doing very well in today's trading session. Other than that, you have some of the select hospitals. You have Apollo Hospitals doing well. Biocon from the pharma pack is doing well. You have UPL from chemicals that's doing well. So it's very diversified in today's trading sessions, because even within sectors that are lagging, you have certain stocks that are doing very well in today's trading session. Case in point being IT. You have some names today that are managing to hold on to the gains, something like a KPIT Tech. It's a one-off that we're seeing, but well, yes, this is what the state of the market is right now. Among the auto names, you have Hero Moto, Maruti, Motherson, M&M. All of them are holding and doing really well. What's not surprising at all today is that while PSU banks are in the red today, you also have Realty that has been there ever since, and some names like Lodha, Oberoi Realty, Godrej Properties continue to lose for the second straight day. So well, that is how the market is looking like. Aisha, not looking too optimistic, but at the same time not much to complain about as well.
Yeah, absolutely not. I mean, at best, it's just quiet consolidation. We're still about 2 to 3 odd percent only away from their all-time peak. But Sanjay H. Parekh joins in from Soham Asset Managers to talk about what he's making of the market. Sanjay, hi, afternoon. Are you feeling any discomfort at all when it comes to the market valuations and levels?
Yeah, I mean, we are not cheap at all. I mean, if you take earnings, see, earnings have been benign. We had a very weak Q4. We've yet to get the preview for all the sectors, but I think Q1 also is quite benign as I see initial estimates. of some of the sectors. Not all sectors previous out, but on a bottom-up basis also we see that Q1 will be quite benign, and it could even percolate to Q2. Overall economy also, as you see, you take IIP, you take any of the core industries, the growth rate have been quite tepid. So credit growth also is less than 10%. So here is a case where a bottom-up, our economy is benign, but the balance sheets are very, very good. So be it the government balance sheet in terms of face, or the balance of payment, or the RBI balance sheet, or the banking balance sheet, or the corporate balance sheet, and household balance sheet. So household balance sheet, of course, at the top end, mid and the top end. So balance sheets are good. Rate cuts will help to revive the economy, but we are yet to see growth. So I think this could be a very slow recovery. I don't expect even Q2 to have a better recovery, and very possibly because of the rate cuts and the tax benefits, Q3, Q4 onwards, we should see recovery in earnings as well. So that is where we are. But even if you take, next year earnings at which are consensus for Nifty at 1300 to 1320, I don't think India deserves more than 20 times. At least I've seen that about 20 times outperformance in the next 12 months is much less. So then we are talking of 4-5% return from here. So I think we will have a time correction and a price correction for sure is what we believe.
All right, Sanjay, but I'm sure that you must be betting on some bottom-up stories. So help us understand that which themes are looking good to you right now, and which themes do you believe are reasonably valued at this point in time?
Yeah, so even our portfolio is, stocks are not cheap, I'll be very honest. Of course, when we bought them, they were reasonable, and hence we do trim also where we think it's getting overdone. But our whole construction is around being domestic overweight, global underweight. So we are almost zero on oil and gas, zero on FMCG, which is domestic, but their growth is missing. IT, we are underweight. Pharma, we are mild overweight. And then we are overweight on discretionary, we are overweight on financials, mild underweight on banks, but overall overweight on financials because our NBFC and capital market exposure, we are overweight there. And then what we've done is telecom, we are overweight with Bharti. Real estate, we have the largest player, DLF. Consumer durables, we have Polycab. And in EMS, we have Sirma. And then port, we have Adani Port. So this is where each of the sectors, we have got leaders or niche, largely leaders at reasonable valuation and where we are comfortable with growth. So that's how we are positioned, and our average price earning of the portfolio is still 15 times on 27, which is at a good discount to Nifty. And ours is a large cap dominated portfolio with 72% large cap.
Okay, so that's a take on the stocks that you hold, Sanjay, as well as the sectors that you're liking. But also help us understand with the kind of sector churn that we're seeing in the market. You have a new sector that's gaining on a weekly basis. In the near to medium term, which sector do you think could outperform the others and could emerge to be a winner in terms of the sectoral moves?
So it will be, one is near-term rotation. We don't focus because, you saw IT suddenly doing well and then again underperforming. But on a 3-year basis, IT is still underperforming. So we don't focus there. But what we do is on a bottom-up basis, themes that we like, maybe, the renewable space where we have one of the largest, like JSW, who's good, is a good representation of how they will benefit in renewable. Or recently, we participated in the solar pump, one of the new IPO that we had, where we think that there is a clear growth runway for growth and possibly a longevity of growth as well, and they are reasonably valuable. EMS is one theme that we like, and we participated through Sirma. Consumer durables, Polycab is now not cheap. We hold it, but when we bought, of course, it was better, much comfortable valuation. But that is one area where I think you will see better growth. telecom, Bharti is what we like. And in capital goods, we have a company in prefab which is growing quite well, which is Interarc. And then, of course, the largest player, Larsen & Toubro. So that's the way we are positioning on a bottom-up basis, where we think that in a low-growth environment, which are the companies which will grow in a better way, hopefully, and that's how we are, that's how our portfolio construction.
Well, it seems to be pretty much a mirror image of yesterday because the Nifty has fallen about almost, 200 odd points from the session highs and almost a 380 point fall coming in for the Nifty Bank as well from the peak of the day, and pretty much a similar story like yesterday. But Sanjay, just in continuation to the sectors that you were highlighting where you see growth visibility, I guess the first litmus test is going to be come mid-month when you will have earnings come by. Where is it that you think the disappointments will persist, and will IT be one of those sectors?
So, no, one positive is that the expectations are quite low as we start. So while the let's start with IT, where they're already guided 1 to 3% for most of them. So what could be the further disappointment is what we to see. But larger caps, barring Infy, I think there are still going to be disappointments if you take constant currency dollar revenue growth rate. But if you extrapolate that, what will happen to this full year? I don't think there will be big downgrades from already. They have already been downgraded. Similarly, in auto, the clearly demand is low. It is showing up in monthly numbers. Of course, some of them are done better than the rest, but overall segment is at least is benign. So that is again expected, and I think global investors obviously would know that this year is a year of low growth, and hence they don't look at this year, but at 3 years, and we also look at it. It's just that if it gets prolonged, then then how are we reasonable valuation? That's where I think we're not, and that's where we need to buy them much reasonable. And so a lot of sectors, even banking, you will see very very benign growth rate. NBFC selectively will do well. Capital markets will do well. Telecom hopefully should be better. Ports should be okay, and then pharma should be neutralish. But I don't think by HPCL, BPCL are advantageous gains. So I don't. They are not recurring where you every quarter they're going to do well. So barring that, I don't see even FMCG. The preview doesn't show any enthusiasm. So I think it's going to be a very benign quarterly season, which is fine. But if the outlook for Q2 is again weak, then I think then I think market is yet to factor those pause. Maybe we should pause, or there could be a time correction or price correction is what we feel.
All right, but Sanjay, investors are also waiting by for the trade deal to happen, and well, of course, all eyes on that. But any sector, do you believe that must be a beaten down name at this point in time, given the fact that when these announcements were through, there were so many export related sectors that got hammered. So any spot where you are finding opportunity, maybe pharma, chemicals, or some of the export related plays within the tire companies, if you want to like really go into minute details and allocation there?
That's what you meant. The deal we would do with US. You're trying to say how do we position that? That's the right. That's the way. That's the question you have, right?
Okay, and any sector in focus where you believe that when this deal is through, the optimism can once again be back and the sectors can react to that?
No, I think, markets have been quite, see, you never saw negative reaction when this was in progress. So I think, market has been watchful, saying that hopefully this should go through. There could be some possible positives or negatives, but at least we've not thought that way. I mean, IT, we don't believe is going to get affected. Other than that, I don't think sectorally any big changes. Of course, auto we need to watch because it's a large exposure. It's not only US, it's what happens across bilateral trades because we have exposure to ancillaries into Europe. There could be second order effect. So we need to watch not only India, US, but what happens to Europe, US, what happens with other counterparts. So we need to really watch before we take a call, and hence we're not taking either side a call based on earlier also we did not take, and today also we're not going to
Sense. Okay, Sanjay, great to have you on the show. Thanks as always for your insights. Good speaking with you.
pay. Thank you. Thank you. My pleasure.
Okay, the fall continues. We're down about almost, over 380 points right now for the Nifty Bank from the session top. And we've slipped about 50 points right now into the red on the index too. Let's see how the last lap of today's trade pans out. For now, we're going to take a very quick break.
Hi there, welcome back to Closing Trades. Let's talk about a stock that's not doing very well at all today, and in fact even yesterday this stock was hammered. And I'm talking about airport lounge service provider Dreamfolk Services. The stock is down 2% in just the last two sessions. This comes after the company has closed certain programs for its clients ICICI Bank and Axis Bank. Let's go across to Sharat to get us all the details on what is causing so much pressure on the stock. Sharat.
Lounge operating service provider Dreamfolk has cracked in trade over the last two trading sessions. Stock is down almost 10%. Now, important key triggers which are impacting the stock. This includes tie-ups with ICICI and Axis Bank. Certain programs, they have been shut from July 1st itself, and the company in its press release itself that stated that this impact is going to be material in nature. Now, of course, the upcoming IPO is also coming, travel, food and services. Mind you, they also have a lounge business, and we compared the financials which were actually towards the travel food side. Their performance has been much better, but except for Dreamfolk over here in the trading counters also we saw HNI selling very active and volumes also picking up in the last two trading days. Now the question is Dreamfolk losing its moat when it had actually come for its IPO? The story was the airport growth, the credit card growth, but now the lounge business that is dependent on the relations with banks, and recently we have seen banks rolling back freebies like lounge access as well. Now, interestingly, airport operators have also come into the scene where they are giving direct lounge access right through their app. So you do not need an intermediary to actually go about and access a lounge. So, of course, that questions the entire business model and the moat of Dreamfolk as well. Now, stock tracker, if you look at it, last two trading sessions, it was down 10%, but this has been a significant wealth erosion for shareholders. 1 year, we see 55% fall in the stock, and this year itself, the number is also big, 45 odd percent. Now let's look at the financials, how it has actually moved. We have taken last 2 quarters in our analysis. Over here, we have seen dip in both revenue as well as PAT going ahead, and of course, some material nature impact can be seen in the coming quarters as well, since they are losing contracts from banks in certain programs as well. Now let's look at the shareholding pattern changes, and interestingly only one mutual fund house is there, that's Motilal Oswal Fund, and see the amount of sell-off which they have done. They held almost 7% stake in the company in December last year ending, and in the March quarter itself they have offloaded more than 4% stake. Of course, the June numbers are expected to be updated in the coming days, and we'll see whether their holding is there or it's less or it's a complete exit. So that is something which we'll be watching out for. But in question is Dreamfolk, is actually the dream really over? That's the question which the investors and the ecosystem is asking.
Oh yeah, lots of buzzing stocks there. Let's in fact pick up that discussion forward. We've got Jatin Gedia, technical research analyst at Mirae Asset Sharekhan, joining in on the show right now, and Vinay Rajani too is with us. Gentlemen, hi both of you, afternoon. Jatin, let me start off with you first. Firstly, analyze the market construct. It's typical of what we saw yesterday when it was a lackluster better part and then came the last minute fall. What are you reading on the charts right now for both the Nifty as well as the Nifty Bank?
Yeah, good afternoon, everyone. So as far as the Nifty is concerned, we believe that it's after a 830-point rally in the previous week, we believe that it's taking a breather. However, that breather has gone way beyond our expectation. We believe that 25,440, 450 was a very crucial support. However, it's trading around that level only. But to our comfort, it's a little disconcerting. Having said that, we believe that if this support doesn't hold, then we could dip towards the breakout level of 25,200 on the downside. So we are a little cautious at current levels, and we believe that if we dip below 25,380, then there is a probability that we might go down towards 25,200 to retest the breakout that happened last week. On the upside, overall, we believe that 25,900 is our expected target on the upside. So we still remain bullish with a cautious outlook, with a stop loss placed at 25,380 from a short-term perspective. Bank Nifty actually has broken down below the previous day session low. So that is comparatively more weaker than the Nifty. For Bank Nifty, the crucial support is now placed at 56,480, which is the 20-day average. And on the upside, the immediate hurdle that we are seeing is 57,000, 57,200. So we continue to hold a bullish stance, but it's a little dicey as of now.
Right, so time to be cautious at this point in time. Both the benchmark indices are not showing that much of a strength, and 24,380 is the crucial level to watch out for. But Vinay, hi, good afternoon. Firstly, help us with your take on the auto space then, because amidst this market and rather a weak market, auto counters are doing very well. I can see Hero MotoCorp, M&M, these stocks are movers on the Nifty 50 side. What do you make of the auto pack? Ready for a comeback?
Yeah, good afternoon. Yes, it looks like that because last week we saw a breakout from the consolidation, and this week also it has been outperforming. So there is a breakout in the auto index, and as you said that large cap stocks are performing well. In fact, Maruti and M&M, these both stocks are performing very well. Along with that, we saw that TVS Motor performed well. Hero Moto is also trying and recovering from the lower levels. So overall, Eicher Motor is obviously a leader and it is trading at near its all-time high. Force Motor, SML, Isuzu, all these stocks are performing very well. So somewhere some stocks are performing very well. So not only auto, metal stocks are performing well. Some commodities and oil and gas stocks are also performing well. So no doubt correction is going on in the market and profit booking can be seen, but some stocks are performing and sectors are performing, and one of the sector is auto, and I think it is looking very strong. And in the as far as Nifty auto index is concerned, which is trading around 24,000, I see a strong resistance at 24,200. Once that is taken out, we can expect some momentum buying to get back into this sector. But yes, a positive bias is there. I'm expecting this sector to perform well because technical setup of large cap auto stocks are looking extremely good, and one of the stock is Maruti and M&M. Apart from that, we like Eicher Motor too.
Take on Nifty Auto, but Jatin, coming back to you once again, a sector that has done well today, a basket of stocks, it's consumer durables, it's Voltas, Blue Star, Havells for that matter. These stocks are all doing very well. What's your take on the charts on some of these?
Yeah, so we believe that Voltas is looking pretty positive. It has broken out of a 3-week consolidation. On the upside, the risk reward is quite favorable to go long even at current levels. We believe that there is a scope for the stock to rise towards 1450 on the upside, and the crucial support is placed at 1330. So the risk reward is quite favorable to go longs, and we like Voltas from a short to medium term perspective. Trend reversal can be seen on the weekly chart. So that's a good pick at current levels.
And here's an ET Now impact. And a day after Sheila Foam released a retracted disclosure of the CEO's resignation, ET Now highlighted the matter to alert investors against governance lapses. And today the company has released the full disclosure. Sharad, my colleague, is here with more details on what this disclosure is all about of the CEO resignation letter.
Well, yes, this is the ET Now impact, and the stock is Sheila Foam. Earlier in the day, we had actually mentioned about the incompleteness of the disclosure given by the company. It's not about the content, but the openness or the quality of the content which was given out by the company earlier. Now, of course, Sheila Foam has released their full disclosure again, And interestingly, the action has been taken after the issues have been raised by our channel. Now, the outgoing CEO resignation, the earlier letter had come and they had two blackened paragraphs, and that had created confusion amongst the investor community as well. We did raise the question, and then also the company answered and they gave a full disclosure. Now, the channel does strive for proper standard disclosure as per the regulatory requirements, and we also hold higher standards of journalism when it comes to financial reporting.
All right, thank you so much, Sharath, for getting us all those details. So that's an ET Now impact, wherein full disclosure has been made by Sheila Foam on the resignation of its key managerial person. But with this, viewers, now let's highlight that the beginning of the month often marks the financial activities wherein salary credit, bill payments and planning expenses do take place. But just as we plan our expenses, it's equally important to plan our investments. To encourage this habit, SBI Mutual Fund, in collaboration with Times Network, is launching a nationwide investor awareness initiative, Bharat Nivesh, Behtar Nivesh, Behtar Kal. The objective of this initiative is to promote the habit of consistent investing among Indians, helping them secure their financial future. And as a part of the campaign, we are observing 4th of every month as a monthly reminder to ensure that you start your mutual fund SIP or ensure your existing SIP continues. So go on and set your reminder to invest consistently and stay committed to your goals for the financial well-being of you and your loved ones. For time now to slip into a very short break. Don't go anywhere. We'll be right back on the other side.
Back with closing trades right here in ET Now, counting down to the last half an hour of trade this Thursday, and we are once again absolutely flat. Did got that little bit of a jagged edge when we did fall about almost 200 points off from the top of the day. We are around that 25,500 print for the Nifty futures. Hero MotoCorp, Apollo Hospitals, Dr. Reddy's, ONGC, Maruti still the gainers in trade. But on the flip side, pressure from a Kotak, JSW Steel, from a Bajaj Finance, Adani Ports and SBI Life is your big drag. It's down about almost 2.5% when it comes to the large caps. It's no different for the broader end of the market as well. There too, the breadth now favors the declines by a bigger margin as opposed to what we had at our hands even a half an hour back. Nykaa, Interglobe Aviation, ICICI Pru, PNB, these are all stocks which are sitting with red ticks. Having said that, Voltas, Blue Star, Bosch, the consumer goods, they are the ones which are actually flying high in trade. Ashi Anand joins in on the show right now. Ashi, hi, good to have you on the show as always. Good afternoon. What is it that you're making of this uptick on the consumer durables sector today? Seems like a little late in the day considering all that the government has been doing. The effect on the stock markets at least should have happened much earlier.
Sure. Hi. Firstly, thanks so much for having me on the show. The broad way we really look at markets is I think markets are in a bit of a wait and a watch mode. You don't really have clear direction in terms of what parts of the segment what parts of the market are likely to drive the next big up move. So if you as in specifically on the question on consumer durables, a very big important or the one big positive of the year so far is the fall that we've seen in interest rates. With 100 basis points cut in kind of interest rates, that does free up a certain amount of household kind of income that was going towards EMIs, which is now kind of available for discretionary consumption. And kind of consumer durables fits very well within that kind of overall space. So I think in the context of an overall market where you are still kind of trying to see and identify what direction the markets are going to take, you have these economic cyclicals, which did very well over the last couple of years. But you basically now have a very high base and growth of that base is still not very clear. You have uncertainties on the global front. You have banking, which is like to see some amount of pressure in the near term. I think within all of that, consumer is operating as a bit of a safe haven. And with rural consumption starting to come back and with hopes of urban consumption coming back, with interest rates coming down, I think that's where you're seeing some amount of movement in the space.
All right, so that's about the consumer durable space with just a few minutes left. So let's also get you some of the tradable ideas from both of our experts. And Vinay, you go first. Tell us which are your stock ideas right now?
Yeah, so I would pick one from the consumer durable space, or you can consumer electric segment, which is V-Guard. So V-Guard has given a a nice breakout on the charts and looks very strong on the today's volume is quite convincing. So VGuard around 394, 395 can be bought. I would suggest a stop loss at 385, and I'm expecting a target of 415 in next 3-4 trading session. The second pick I would take from the FMCG space. So FMCG has started performing today, and it has underperforming. It has underperformed in this year till date, and now I'm expecting that mean reversion could come, and this sector will also perform in this market. So overall, Dabur India looks very strong from the FMCG space. So Dabur can be bought at 491. I am suggesting a stop loss at 480, and on the upside, I'm expecting a target of 510. So these are the ideas for next 3 to 4 trading sessions.
Okay, so those are nice picks right now, both from the consumption basket. Jatin, coming to you, any names making it on your radar from consumption?
Hindustan Unilever is one which we have picked. So we believe that on the daily charts there is a trend reversal. So we believe on the upside there is a scope for the stock to move towards 2385 from a short-term perspective. So HUL is a buy. Stop loss should be placed at 2290. Another stock that we have picked up is NTPC. So NTPC, after a sustained decline, is showing signs of a trend reversal, trading around crucial Fibonacci supports from where the buying interest is kicking in. So we believe that NTPC also can be bought from a from a 1 week perspective. The stop loss should be placed at 328, and on the upside we are expecting 348 in the case of NTPC.
That's that and some of the individual stocks. But what's also been sensitive is the nifty rejig contenders today, and that's likely to take place since September end. What are the likely inclusions and exclusions? Varun is here with that list.
Well, so the Nifty semi-annual review will happen in the month of September, the cutoff date for which is the end of July, and the announcement is expected to come in the later half of August. Now, Nuvama has come out with a report wherein they are highlighting the probable changes that could happen to Nifty 50. So, there are two stocks which could enter the Nifty 50 index, that is Interglobation and Max Healthcare. And if Max Healthcare is included, it could actually imply passive buying of around $400 million into Max Health. But they say that the only scenario where Max Healthcare may miss the inclusion is that if HAL, that is Hindustan Aeronautics, outperforms Max Health by around 12% immediately, an outcome for which they say is actually has a very low probability. Also, they say that the two stocks that could actually be excluded from Nifty 50 in the semi-annual rejig are actually Hero MotoCorp and IndusInd Bank. They have also made their comments on BSE Limited, because earlier it was understood that BSE Limited could also enter Nifty 50. So, Nuvama says that as per their calculation, there is zero probability that BSE Limited would enter Nifty 50, at least in the September semi-annual rejig. So, there are no chances that BSE Limited would enter the Nifty 50 in the September review. Interglobation and Max Health has the highest probability of entering Nifty 50, and Hero MotoCorp and IndusInd Bank will actually be included from Nifty 50 in the semi-annual rejig.
All right, thank you so much, Varun, for getting us all those details. So as we move closer to that date, more clarity will definitely kick in, and maybe some adjustments with respect to the passive flows can also take place. But Ashi, just wanted to have your take on some of these brokerage related counters, because just today we have a news flow saying that Motilal Oswal AMC has actually crossed 1.5 lakh crores in AUM, and you can see the excitement in the stock. And Ashi, this theme has been playing well in the markets of late, because with this whole thing happening with financialization of saving, rather, there's indeed a lot of interest with respect to the stocks as well. Give us your sense. How do you see this particular theme? Are the valuations justified with the kind of growth that the companies are posting?
Yeah, so financialization of savings is, according to us, one of the more interesting themes to play over the kind of coming decade. If you just look at penetration levels across financial products in India, compare them to any other kind of emerging country around our scale, some of the more developed nations, etc., there is just tremendous scope for kind of a shift of financial savings away from traditional away from traditional real estate, fixed deposits, and gold, and towards kind of the kind of financial markets. I think when you are looking at playing this theme, you do need to kind of be a bit careful in terms of what parts of the theme you are playing in. So this is a space that we are quite actively, that we do quite actively have in our portfolios. What we do quite clearly like are wealth management, asset management plays, We see these as just direct plays on the kind of growth of the wealth and asset management sectors in India. Brokerages is actually a place we are a bit slightly more cautious about. It is important to understand that a very large amount of the growth that we've seen in brokerages post-COVID has come from highly speculative F&O trading. And this is a space that this regulator is very clearly clamping down upon. They have already introduced various measures and they could introduce further measures. And you have seen quite sharp declines in overall F&O activity. While you're kind of going through this regulatory upheaval, you want to possibly just stay away or be a bit careful about exposures to kind of brokerages, especially in terms of how much you're paying. But wealth management, asset management, insurance, these are all kind of segments that we believe are very attractive, that we hold reasonable parts of in our overall diversified portfolio. Brokerages also could become quite interesting, but we just have to wait to see as the current regulatory kind of environment shapes up.
Okay, so that's the take on the entire financial theme and the capital market theme. But let's talk about banks in particular today and other stocks from the financial basket on the back of this Macquarie note that we've seen today. And two stocks that stand out on the back of this Macquarie note today are IndusInd Bank and Kotak, both seeing significant downgrades to their ratings. And for IndusInd Bank, the target price has been slashed from 1210 to just 650 rupees per share. Surprisingly, the stock has made a recovery from the day's low. But when I on the charts, what are you making for both of these stocks, Kotak and IndusInd? Because Macquarie's note looks rather negative.
Yeah, so Kotak Bank has been correcting for last 5-6 sessions, and recent high was 2233, and now it is trading around its 50 days EMA, which is placed at 2125. So definitely it is a zigzag kind of pattern. There is no clear cut direction, but the overall strong support I see around 2100. 2100 happens to be the previous swing low also. So I feel that unless and until this level is breaks, there is hope that again in the coming session it will bounce back. So no doubt I'm not recommending any long trades right now. It is going weak, but it could come down towards 2100 and try to find out the support that we need to track. But as of now, there is no trade in the Kotak Bank. As far as IndusInd Bank is concerned, IndusInd Bank is relatively doing better and placed above all in key moving averages. So recent performance has been good, and I think there is a strong support around 825 is a positional support. With that stop loss, one can continue to hold on to the long position. So yes, relative strength is there, and IndusInd Bank on the short term chart looks better than Kotak Bank.
Let's check in on PNB as well. The global advances saw an uptick of about almost 9.9%, standing at right now 11.3 lakh rupees. That's what the quarterly update indicated for PNB. Ashi, what is it that you're making of this surge that one is seeing, or catch up, whatever you may want to call it, in the entire PSB space? That's the PSU banking space. I mean, for long, it's ICICI Bank and HDFC Bank, along with Kotak as well sporadically, which have been the market favorites. What's the take now on PSBs?
So I think catch up is probably a good kind of a word, right? And if you're just looking at kind of the relative performance of the traditional high quality franchise private banks versus PSU banks, what you have seen is over the last 2.5 years, there was a very interesting catch up that actually took place. What happened is that historically, and you just have to go back a bit, if you go back 4 or 5 years, there were large corporate NPAs that your PSU banks were actually recognizing, while your private banks had very, very clean chits, right? So if you were looking at the relative performance, you'd have private banks growing at 20-25%, pristine NPAs, high NIMs, high profitability, and these were trading at kind of 2.5, 3.5 times book. PSU banks were struggling with asset quality, were struggling with capital, were struggling with growth, and were actually trading well below book. So now over the last couple of years, you have seen a clear narrowing both of performance and of relative valuation. So kind of some of the PSU banks, which were trading at almost 0.5, 0.6 times book, have moved back towards book value. You have your private sector banks, a number of them which were closer to the 3 times multiple, having moved back towards the 2 times multiple. This kind of collapsing of the difference in kind of relative valuations has also been kind of accompanied by a reduction in the kind of relative outperformance. So PSU banks have come back in terms of overall growth, asset quality is fine, is no longer a concern. But if you're just looking at where they stand as of right now, we kind of believe that both private banks and PSU banks are kind of optimally valued. You may get pockets of under and outperformance from a shorter term perspective. But just from a longer term perspective, I think the large catch up that PSU banks had, that is largely over. There may be certain stock specific names which may be a bit more interesting. SBI does kind of stand out amongst the stock specific names. But I think in terms of just relative performance and this big catch up that you've seen over the last few years and possibly also in the near term, I think that part is largely done. And we continue to kind of see higher quality private sector franchises as more attractive longer term buying holds.
Okay, so that's the take on the entire banking and financial space. But let's just focus and talk about metals. Nifty Metal is one of the sectors that's deep in the red today. But from that also, Tata Steel is in focus from that pack on the back of their AGM that they held yesterday. Tata Sons chairperson N. Chandrasekaran has reiterated focus on cost optimization and operating efficiencies among other focus points. My colleague Ashesha, who tracks the sector closely, is here with more highlights from their AGM. Ashesha.
Well, yes, some important commentary that has come in from Tata Steel chairperson N. Chandra, especially with respect to transitioning to green steel. First up, let's talk about their UK operations, where he said that they've progressed towards low emission steel making. They decommissioned 2 blast furnaces in Port Talbot last year, and they are transitioning to state-of-the-art electric arc furnace, which is likely to be completed by FY28. As far as the Netherlands operations are concerned, the company continues to remain in discussions with the Dutch government in order to get some kind of assistance for transitioning to green steel. They say they also launched a cost reduction program. Now remember, the cost reduction program is across geographies. Total consolidated cost is likely to come down by about 11,500 crores in FY26. India is likely to contribute about 4,000 crore cost reduction. UK is likely to reduce cost by about 3,000 crores, and Netherlands cost is likely to come down by about 4,500 crores. He also said that they remain confident that the transition in green steel making in UK and in Netherlands is likely to complete as per plans in the next few years. So some commentary that has come in with respect to green steel transition, especially in Netherlands, which is in progress, and UK, for UK, they are in conversation with the Dutch government and the cost reduction plans that the company has come out with. The stock in focus on the back of this.
Okay, that's Tata Steel, which is currently in focus and has been an active mover all through today. We're pretty much winding down for the day, and we're not quite closing at the session lows. We've resurrected from there, but it was pretty much the same pattern as we had in trade yesterday. We're closing in mildly soft around the 25,400 thereabouts print. Nika, PNB, Interglobe Aviation, NBCC, NCC, ICICI Pru Life, these have been your session laggards today. Ashi, before we let you go, just your thought on whether or not you're adding any positions in the current market?
We are kind of selectively doing so. I think the two main things that we're really watching out for as we get into the corporate results season, we are trying to kind of look for indications of where you're likely to see growth recovery and where the growth recovery is likely to be a bit more front-ended. I think that's the one key direction that we're really looking at, and we're going to be watching quite closely over the kind of coming corporate results season. We're also hoping that over this result season, we'd also know what Trump is really doing in terms of tariffs across the world. It does make it quite a difficult investing environment where you don't really understand what's going to happen in terms of global demand and relative positioning of India versus other kind of economies. I think as we get greater clarity on these two elements, the growth recovery and what's happening with Trump and trade, we are very clearly looking at deploying more capital. We don't have too much cash at the point in time. We just have about 5% cash in our portfolios, but we'd be looking at getting fully deployed as we get some clarity on these two elements.
Okay, so that's Ashi's stance on how to approach the market right now and how they are positioning their portfolio. But Ashi, on that note, we'll let you go. Appreciate you joining us on the show this afternoon. But before we start winding down for the day, Jatin, just give us a sense of what kind of levels you're expecting to see at market open tomorrow for the benchmarks.
Yeah, see, overall, if I have to sum up today's session, it has been a little disappointing. We believe that there could be a mild negative opening in tomorrow's trading session. And if we open below 25,375, 25,380, then I think the selling pressure is likely to continue in tomorrow's trading session as well. So we are a little bit cautious for tomorrow's trading session. Crucial levels are 25,380 and on the downside, it can extend towards 25,200.
All right, Jatin, with this, we'd like to thank you for taking the time out and speaking with us. So definitely, those are the levels that we will be watching out for. Within some of the global cues, we'll be watching out for the US markets, because today is going to be the half trading session for the US markets, and of course, some of the macro data is also awaited. But time now to wrap this edition, and let me hand over to Ashesha to tell us that how did the market shop in today's trading session.
Well, yes, we gave up all of those morning gains by the end of today's trading session. In the last 1 or 2 odd hours, we were declining in trade. In fact, Nifty is now ending nearly 60 points lower. 0.2% gone for Nifty 50. 25,393 is where we are currently trading. Nifty Bank also in the red. Nifty Bank, in fact, shed nearly 225 points in trade today. 56,780 is where we are ending. For the broader market indices, that also should come up for you on your screens. Nifty Small and Mid Cap Index also under pressure in today's trading session. In terms of individual stocks, we had SBI Life, which was the biggest loser on the Nifty 50 index, followed by Kotak Mahindra Bank, Bajaj Finance and JSW Steel. All of them laggards, some of the biggest losers on the Nifty 50 index. On the gaining side, though, we had Apollo Hospitals continue to trade with some amount of gains in today's trading session. We had Hero MotoCorp, Dr. Reddy's, ONGC, Maruti Suzuki, some of the other gainers from the benchmark index. In terms of individual stocks that were in focus, first up, let's talk about Nykaa. On the back of a big block deal that took place today, nearly 2.3% equity changed hands in 3 block deals. Nykaa was down 4.5% in trade. Motilal Oswal, after its AUM crossed 1.5 lakh crore mark, this one was gaining in trade. Motilal Oswal up nearly 8% in trade today. PNB, on the back of that operational update where advances rose by about 9.9% on a year-on-year basis, weaker than what the street was working with, the stock is ending with a cut of nearly 3.5%. M&M Finance, meanwhile, this one also came out with its operational updates and it was rather weak, but the stock, of course, is ending up in the green. It is off the day's highest point. In fact, at one point in time, M&M Financial was gaining nearly 3.5%. At the moment, up nearly 2%. 266 is where M&M Financial is. Meanwhile, a whole host of banking stocks were in focus on the back of a Macquarie note. We had Kotak Mahindra Bank, SBI Life, ICICI Prudential Life, all of these stocks in focus on the back of this report. Kotak and SBI cards have been downgraded. Kotak Mahindra Bank ending the day with a downtick of nearly 2%. All of these AC manufacturers were also in focus, the likes of Blue Star and Voltas. We saw some bit of buying in these counters. Blue Star and Voltas should also come up for you on your screens. Voltas ending nearly 2.5% higher. Narayana Hrudayalaya, remember the stock has been in focus for the last several trading sessions, and after a fall of nearly 12% in last 3 trading sessions, this one is ending with an uptick of nearly 1.5%. Avenue Supermart, they came out with their operational updates for the quarter gone by. Revenue stood at about 15,900 crores, the stock ending 1.5% lower. So a whole host of buzzers from the broader markets, but for the index level, we ended the day in the red and we saw a lot of profit booking in the last 1 hour. Nifty is ending 56 points lower, near that 25,400 mark. But that's all the time we have on this edition of the show. More news and updates coming up on the other side.